You did the work. You delivered the goods. You sent the invoice. And now, you wait. Welcome to the most expensive silence in Indian business. This is the reality for millions of MSME owners across India. 30 days pass, then 60, then 90. Meanwhile, your rent is due. Your supplier is calling, and your staff still expects to get paid on Friday. That gap between doing the work and actually getting the money. That is the delayed payment trap. And it is absolutely crushing small businesses at scale. We are not talking about a minor inconvenience here. At any given moment, India's MSMEs, micro, small and medium enterprises, have 8.1 trillion rupees locked up in unpaid invoices, just sitting there, frozen. On top of that, 28,000 crore rupees worth of payment disputes are piling up unresolved before government councils that are supposed to fix exactly this problem. Think of it like a farmer who harvests grain, but the buyer says, I will pay in 90 days. That farmer cannot buy seeds for the next crop. The work is done, but the cash is stuck. Now multiply that across 74.7 million MSME firms employing over 328 million people. Businesses that contribute 31% of India's entire GDP, nearly half of all exports. And you start to see the scale of what is actually broken here. There is even a law, the MSME Act of 2006, that says buyers must pay within 45 days. Break it, and you owe compound interest. But enforcement? Patchy at best. And as this trend line keeps rising, more disputes, more frozen capital, more pressure. The structural credit gap facing MSMEs has ballooned to roughly $380 billion. The backbone of this economy is running on empty because cash is trapped inside invoices. So what is being done about it? That is exactly where we are headed next. So we know the problem. Cash is stuck, businesses are bleeding. But here's where it gets interesting. Because the government actually has a fix in motion. It's built around something called TReDS, Trade Receivables Discounting System. And here's the simplest way to picture it. Say you've got a hotel booking coupon worth 10,000 rupees, redeemable in 60 days. But you need cash today. TReDS is the platform where you sell that coupon to a financier for say 9,700 rupees right now. You get your liquidity, the financier collects the full 10,000 rupees from the buyer later. Everybody walks away happy. That's invoice discounting. And TReDS is the digital marketplace where this happens at scale for real business invoices. Now, the new reforms are turbocharging this whole machine. First, they've dropped the entry barriers. NBFCs, those are lenders outside the traditional banking system, can now join TReDS with a net worth of just 25 crore rupees, way lower than before. And any buyer with a turnover of 250 crore rupees is now required to be on the platform. More financiers competing for your invoices means the discount rate falls. So you actually keep more of your own money. Second, a credit guarantee fund is being introduced specifically for TReDS financing. When a guarantee fund backs a loan, the lender's risk drops. And suddenly, Tier A and Tier EI vendors who were completely invisible to banks are now fundable. Third, no property to pledge? No problem. Your GST filings and e-invoicing records can now build your credit profile. Your transaction history becomes your financial identity. And finally, digital dispute resolution through the Samadhan portal means you're not spending years in court fighting for what you're already owed, directly chipping away at that massive backlog of unresolved cases. The whole pipeline, from raising an invoice to cash hitting your account, is being digitized, de-risked, and genuinely democratized. But knowing the system exists is one thing. Knowing whether it's actually working and what it means for you on the ground. That's what we're getting into next. So now the real question. Who actually pockets the gains here? Who gets left behind? And what you do about it starting today? Let's talk winners first. If your business has a credit score above 700 and a clean repayment history, you are genuinely sitting on an edge right now. The data is pretty unambiguous. MSMEs above that 700 threshold have a 65% higher chance of landing follow-on funding. Think about that. Same invoice, same business, just a better score. And suddenly financiers are practically competing to back you. With TReDS expanding and more lenders flooding in, your invoices become premium assets. Faster cash, lower discount rates. That is the game. TReDS platforms like RXile and M1 Exchange are winners too. And here's why that matters for you. With CERSAI mandatory filing now locked in, the fraud risk that used to spook lenders drops sharply. Cleaner platform, more confident lenders, higher transaction volumes. More buyers means more competition for your invoices, which pushes rates in your favor. Fintechs like Drip Capital and NBFCs with factoring approval can now tap the credit guarantee fund to reach exporters and smaller vendors that banks simply would not touch before. Real competition. Finally. But look, not everyone rides this wave. If your books are informal, your GST filings patchy, or your payment history is a mess, these new credit rails will not open for you. The system is essentially a filter. It rewards digital, compliant, and creditworthy. If your competitors are on that list and you are not, this reform actually widens the gap between you. So here is what you do. Get on TReDS if you are not already. The expanded buyer base means liquidity on demand. Keep your GST filings and e-invoicing spotless. That is your new credit score, full stop. And if you have any payment disputes sitting unresolved, file them on the Samadhan portal now. Do not wait for the courts to wake up. India is literally building a financial highway for small businesses. The only question worth asking is whether your business is road ready to get on it. That wraps this series. The infrastructure is being built. Your move is simply not to miss the on-ramp. Follow us for more updates like this. Thanks for watching. And don't forget to follow us on YouTube, Instagram, and X.